I would posit that it's really all of our jobs, right? It's important to all of us. Regardless if you're just a consumer of financial services, or perhaps you run a bank like myself, or you're a regulator, it's something that we all need to do together. But there are features of this economy which I believe come from history, and many of you as Myanmar will know this better than I, that effectively have meant that the system has not been set up to be inclusive. And it's not really thought about that way. In fact, it seems to be somewhat almost haphazard that it grows to become more inclusive over time. And there are a number of features to this. It seems that state-owned banks have been set up to serve, quote-unquote, the people. And you see this again and again, be it for agricultural purposes, right? Be it for SMEs, be it for housing. You see a plethora of state-owned banks that are set up, founded, management teams put in, funding provided, and then they go off to set up a social purpose. In my mind, that's a reflection of perhaps weaknesses in the private financial system. Right? In other words, private banks should really be filling a lot of those needs. Private banks are owned in this country largely by single founders, right? Families. They're run better or worse depending on the bank, right? Depending, on the professionalism of the team, and that's not something we're going to talk about tonight, but we're really going to talk more about the system as a whole. But if you look at the way the banks are structured, the truth is that what happens in this country is that banks borrow from the poor and they lend to the rich. Right? Some of you may have heard me say that before, because in truth, the way the regulatory structure has been created prohibits many people from borrowing. I was quite interested in how many people put your hand up. I'm quite impressed, right? How many people have been able to access credit from banks? And that's because you need collateral in order to borrow. But what's the read-through to that? So the rationale is risk. We need collateral because we need to de-risk a transaction. But the inference is that you need money to borrow money. How can you have collateral without money? So you need money to have collateral, and then, And ironically, you end up in a situation with capped interest rates where those people with collateral, in fact, borrow at a subsidized rate. Because I think many of you know that as someone without collateral, if you try to borrow in the market, you're borrowing at conservatively 2-3 times the bank rate. Conservatively, right? And typically, for those people that really need credit, supply demand, you're borrowing at multiples of that. We can't get anywhere until we look at the nature of the regulation and the goals. There has to be an acknowledgement that the regulators in this country, be it in the financial services sector or in any other sector, are accountable for the entire economy. All the people in Myanmar. Not just the people in the formal financial system. So when you say the cost of debt in Myanmar is 13, that is simply untrue. If you look at the real cost of credit in this country, it's between 40 and 50%. It's that issue that needs to be solved, not the issue of the 13% for those that have collateral. So I think from a regulatory perspective, we actually need to walk the walk about financial inclusion rather than just talking about it and saying this would be a wonderful idea if we had it here in Myanmar. So one is, again, focus on the access to credit. Allow for real competition between lenders and borrowers. If you've got a great business, you should have banks falling over themselves to lend you that money, right? At the right rate. Allow a competitive state. You've seen this in other markets, right? Where ultimately the market clears because you're allowing banks to compete over good borrowers. Allow banks to make decisions and be accountable for their own performance. So I think that there should be more of a focus on access to credit rather than the cost of credit. But where technology will solve the problem is lowering the transaction costs to lending. It will also lower the transaction cost to deposits. You will be able to deposit money at one of thousands of touch points across the country and borrow digital credit on the phone. And I truly believe that will happen. And I think Myanmar is uniquely positioned to benefit from this. In many ways, I think Myanmar, despite some challenges, really has a last mover advantage in this respect. There really is no legacy. There are many people in this country, the first time they ever picked up a phone, it was a smartphone. Now, it may have been a 20, 25,000, 30,000 chat phone, right, of a brand that I can't name from China. Regardless, it works, and I can tell you it's got more firepower than the Nokia phone I had back in whatever that would be, 98, you know, the USSD phone. And it really is incredible of that processing power that are in those phones. And there aren't many people thinking about these challenges on how to get this solved. Now,